Hello, I'm Jenny Brown and welcome to the Mortgages for Business weekly Buy-to-Let mortgage market update. I hope everybody is keeping really well and getting suitably festive. We've got a tree up now, so we're on the road to Christmas. It's going to come around very quickly, I would imagine, as it always does. A different Christmas this year for most, I would expect, definitely for us, but that doesn't mean it has to be bad. So we're looking to try and make the most of it and make sure the kids have a great time. So look, in terms of what we have seen from lenders in the last week, a lot of changes actually, and all generally speaking quite positive. So first of all, we're really happy that Paragon has released a new product for larger loans, and larger loans are those which sit between £350,000 and £1 million in this example. Now, Paragon, as we know, will lend to individuals and limited companies. They have no maximum properties in the background. They're very good with things like older applicants, people whose they have a bespoke rental calculation on the portfolio in the background, which makes them slightly more flexible than some of their counterparts. And this product has a 5-year fixed rate at 75% loan to value at 3.5%. Now, the thing that makes this deal particularly competitive is the flat arrangement fee. So it has an arrangement fee of £3,500, which actually, when you look at the other deals sitting at around the 3.5% mark, they tend to be more charged as a percentage, so 2% of the loan amount. So actually 3.5% 5-year fixed with £3,500 fee, particularly if you're looking at those larger loans, actually makes a huge amount of sense. Now, on this product, there is a application fee of £299, but there is also free valuation. So actually in the round, it's a really, really good offering. So we're really pleased that Paragon have brought this out for our landlord clients. Now, also in the last week, we have seen the Coventry Building Society reduce their buy-to-let rates, and they're now starting at 1.59%. Now, one of the things that the Coventry offer, which is quite unique, is they do have a series of products called a flex range, which is where they offer a fixed rate, but there are no early repayment charges at any time, which is very, very unique. And actually one which we feel brings a really good balance to our clients of security of payments, but likewise the ability to come out of the mortgage at any time. And I think at a point in our lives when we have got quite a lot of uncertainty in front of us, having some flexibility actually is quite valuable. Now, the flex range starts at 1.85% on a 2-year fix and goes up from there. Now, in terms of the Coventry as a lender, we really like them. They're not the raciest of lenders. They lend on straightforward properties to individuals only, so no limited companies or LPs, that kind of stuff. And no HMOs and no multi-units. However, obviously a large number of landlords still very much fit within that kind of more vanilla end of the market, and that's fantastic. Now, the thing about the Coventry that I really like, so first of all, there's no minimum income requirement. They're very flexible for older applicants, and you can have up to 10 buy-to-let properties in the background with them. So that covers a large number of landlords. So a really great offering from the Coventry. We've also seen Land Bay release 2 80% loan to value products, which are available for standard properties only, but these are available to both limited company borrowing and personal. The reason this is quite exciting is because actually in the limited company market, particularly the 80% offering from all of the lenders is actually very, very small. And so it's great to see these guys, put their head above the parapet and bring something out to fit in with that. They have a 2-year fix at 80% and a 5-year fix at 80% loan to value. The loan size requirements are slightly restricted, but actually, it should largely serve to cover most people, and the rates start from 3.79%. So very, very good from Land Bay. Thank you to those guys for bringing out something a bit different. Foundation Home Loans have released 2 HMO early remortgage specials, and this is for individuals and limited companies. And this is where they will remortgage properties where the purchase was less than 6 months ago. As long as you didn't just buy it for cash, you use some kind of funding instrument to acquire it. Additionally, all their buy-to-let remortgage products have been released with incentives, with rates starting from 3.34% for 2 years and 5 years from 3.54%. They've got flat arrangement fees, a free standard valuation, and there's no application fees, and £250 cashback on completion. So really competitive products being launched from Foundation there. Just to touch on early remortgages. So this is where you remortgage a property which you have owned for less than 6 months. There's a huge amount of myth in the market, I think, from borrowers with regards to what is possible. So absolutely, there are lenders who say, look, unless you have owned the property for at least 6 months, we're simply not going to finance it. And this links back to the credit crisis, so the previous kind of time when we were having some real issues. And for various reasons that I won't bore you with today, but lenders decided to come away from what we could call instant remortgages. So you could buy a property today and remortgage it tomorrow, because there were some fairly bad practices going on within the market. So for a period of time, remortgaging within 6 months simply wasn't really on the table. But over time, that has evolved. And there are absolutely lenders who will remortgage within 6 months of ownership. I think the question mark with these guys is actually what value they would place on the property within that time. So there are some lenders who say, we don't mind if you've owned the property for less than 6 months, but irrespective of how high the open market value of the property is now, our valuation of the property will be the purchase price plus the cost of any works to the property, irrespective of if actually on the open market it's worth a lot more than this. But there are also lenders who will say, look, actually, as long as we can understand why you have seen an uplift in value within the first 6 months of ownership, we're very happy to simply lend against the open market value. So if this kind of applies to you, don't feel you have to wait 6 months. There are options available for you within that, as we can see with Foundation coming into that market as well. We've also seen Precise Mortgages bring out a swathe of new rates, varying on 5-year fixed rates, personal products, limited company. They've got a different set of products for HMOs and multi-units as well. These products all have flat arrangement fees, which again is really good for those particularly larger loan amounts. The products are available up to 75% loan to value as well. So really great news from Precise Mortgages there. We've seen Accord Mortgages also change some of their products, bringing some pricing down. They've increased their incentives on some of their products as well. And by incentives, I mean the cashback they give you on completion. So they've actually got some 80% loan to value products now where the cashback has been increased from £250 to £1,500. And they've also just tinkered with some of their pricing as well. So again, Accord are looking to open the doors up and bring some more business in now, which is great to see. And lastly, in the last week, we have seen the Cumberland Building Society, increase their rates. Now, the rate increases vary between 20 basis points and 75 basis points. The Cumberland are a lender that are mortgages for business we tend to favour for holiday lets. That's really where we feel that they come into their own. And the reason they're great at holiday lets is because they have some really good pricing. They will lend to limited companies and individuals. But really the key for us here is that they will lend on those properties based on the holiday let income rather than a notional AST income, which some of the other holiday let lenders will do. So they're a really great lender from that perspective. So I'm guessing what has happened here is they're probably getting fairly overwhelmed with business. They've just pushed their pricing up to try and slow things down. But yes, a good week from the lenders this week. Lots of nice new products coming out in a bid to drive in some new business from the lenders, which is always really great news for our clients. So in the round, good news. House price news. So look, house prices in the UK have increased by 7.6% in the year to November, which is the sharpest rise seen since June 2016. And this is according to the latest Halifax Price Index. The figures showed the average UK house prices have risen by around £15,000 since June, which is the strongest 5-monthly gain since 2004. Now, they've reported that the housing market has so far largely been insulated from the economic impact of coronavirus due to the support measures that have been put in place, such as mortgage payment deferrals. Now, interestingly, just on that note, the latest figures from UK Finance revealed that 127,000 mortgage payment deferrals are currently in place, or were in place in mid-November, I should say, which is a significant reduction in customers seeking this form of support. Interestingly, they say that the June's peak of numbers of people on mortgage payment deferrals were at 1.8 million. So I'm hoping that it's really great news that this number has come down from 1.8 million to £127,000 because people are in a much better position now, with people being back at work and all that kind of stuff. I suppose there's a kind of worry in the back of my mind that whether these people are actually back paying their mortgages because their deferral period has ended. They've utilised their full 6 months. They've had no choice but to go back to paying. But hopefully, like I say, it's more on the positive note rather than the more negative. I wanted to share an article that I read this week, which I think is interesting, and probably more for developer clients actually, but also still for investors as well. So a survey has been revealed that nearly 90% of people think that the government should be widening housing options for older people, including those with care. So a survey was conducted by Later Life Ambitions and associated retirement community operators. And this revealed that more than half of older people are interested in moving, but they're actually lacking good downsizing options. The research highlighted the disparity between the needs and wants of older people and the options available to them. Now, they said that those surveyed, who included a mixture of ages, but 62% of whom were 65 years old or over, overwhelmingly supported the government action to increase the provision of housing for older people. When asked to rank top priorities for government change, the creation of alternatives to care homes came first, followed by developing a clear national strategy to encourage growth. Now, one of the things that I found really interesting in this report is that they were talking about the kind of community retirement living complexes, which you see, particularly in America, actually in Florida, they're very, very big there. But essentially, it's a place where people can go and live a very, very independent life, where there are some shared facilities and also there's some care on site as well. Now, in this, in the UK, just 0.6% of over 65s currently have the opportunity to live in a retirement community. This compared to 5 to 6% in New Zealand, Australia and the US. So I think that really just shows where we're kind of lacking in terms of provision for housing for the older community. And as we all know, there's a lot of older people who are living in larger houses who do want to move on, which would then free up housing stock for the kind of middle-aged generation who want these larger homes. And this would help free things on. So I thought it was just a really interesting thing that was worth sharing with you if you're considering a development or indeed an investment proposition. And that is us for this week. Fairly light on news. Obviously, we had to include some housing market data for you, but I hope you found that interesting nonetheless. We've only got a couple more of these left until Christmas now, so I do think actually the news stories probably are going to start quietening down as we really go into the festive period. But we'll keep reporting all the stuff that we think is important to you guys as it comes up. So until next week, please do look after yourselves. Please do get your trees up if you haven't already. 'Tis the season to be jolly and all that. And if you do have any questions, please do go on our website, mortgagesforbusiness.co.uk, or give us a ring 0345 345 6788. We'd love to hear from you. Until next week, look after yourselves and see you then.